If you invested $10,000 into Google stock 10 years ago, you would have returned more than $23,300 today. That means you will have more than tripled your money in that 10 years time. You would have started with $10,000, you would have earned 23,300 and you would have ended up with $33,300 today. I know I would be happy with tripling my money in 10 years. I don't know about you, but that's the kind of investment I would really like to have. Now, how did Alphabet Google get here? I'm going to answer that in this video. I'm also going to give a little bonus at the end of this video and answer if Alphabet or Google can do this in the next decade. So what's the next decade likely to look like? Can investors buy the stock today hoping to get similar returns for the next 10 years? So I'll answer that too in this video. So let's look at how Alphabet got here. Alphabet, the parent company of Google, it looking at the returns over the last decade, it was, spread out nicely over the last 10 years. And then, of course, during the pandemic, it exploded higher as we were spending more time online. And that's really good news for Google search. That's really good news for YouTube. And Alphabet gained the benefit from that tailwind. However, the stock is down meaningfully over the last year, ever since economies started reopening in 2022, ever since the Russian invasion of Ukraine. That's been bad news for Alphabet, and so the stock price is down off their highs in late 2021. But looking at the longer term trend of Alphabet's revenue in the trailing 12 months, so looking at roughly annual revenue for Alphabet going back all the way before 2014, you could see revenue starting from less than 80 billion in annualized revenue and climbing all the way up to 282.84 billion in the most recent trailing 12 months. Now, Alphabet primarily operates in the advertising industry, which is in 2022, estimates suggested that total ad revenues were roughly around $800 billion. So Alphabet is capturing a significant share of that advertising market. Still, it has room to continue expanding. It, more and more advertising is moving to digital channels and away from traditional methods. Think of things like print magazines and billboards, radio advertisements, ads on during cable programming or satellite programming. That's all moving to digital channels like connected TVs, like search engine results, like social media and YouTube. And those areas are more effective for advertisers because they can measure those results better, right? You can determine how many people clicked your advertisement if you have it on a Google search result. Whereas, how can you tell how many people saw your billboard if you're running a billboard advertisement? That's a lot harder to guess, right? And then, how many people bought something because of a billboard that they saw? Again, that's hard to measure. Or how many people heard your radio advertisement? Or how many people bought something as a result of hearing your radio advertisement? Those measurements are a lot harder, and for that reason, marketers are moving away from those types of advertisements and moving more towards digital channels where they can precisely measure how many people clicked your advertisement, how many people saw it, how many people bought something, how much did they spend when they bought something, what times of day did they buy something, what types of products did they buy. All of these measurement features uh, are more available in digital channels than legacy channels. And so, of that $800 billion in ad spending, a greater and greater share is moving to digital channels. And so, within the market, Alphabet is in a nice area as well. So not only is Alphabet operating in a massive total addressable market, but it's also operating in the most lucrative parts of that $800 billion market. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And so another thing that has contributed to Alphabet's stock price increase over the last decade is its soaring earnings per share. You look at profitability was roughly flat from 2014 to 2018, and then it started to really explode higher, moving over $5 earnings per share, and that's come down slightly as economies have reopened. And this decrease you see here from 2022, the earnings per share from the peak down to $4.55. If we look back at the share price, that's really close to the trend line here. So as earnings per share has come down over the trailing 12-month average, the trailing 12-month figure, that's also contributed to the declining stock price. So this is something important for investors to keep in mind, is that earnings per share is a strong indicator of where the stock price is going to go. So if you're considering making an investment in a stock, in any stock, look at its earnings per share prospects. If the earnings prospects look good, the stock price prospects are also likely to be good. So to answer if Alphabet's stock price can have a similar run over the next decade as it had in the previous decade, I'm going to look at a couple of things here. First, I'm going to look at its valuation. Its forward price to earnings ratio of 14.92 is relatively cheap for a company like Alphabet that has demonstrated an ability to grow earnings per share robustly over the last decade. And even if you look at this forward price to earnings chart, you can see this is the cheapest the stock has been going all the way back to January of 2022, according to this valuation metric. Now, its earnings prospects over the next decade are also likely to be solid. The company's made announcements this year that it's laying off thousands of workers, bringing down costs, and saying that it overhired during the pandemic and it's bringing that down. Meanwhile, its revenue prospects are likely to rebound as consumer spending normalizes over the next decade, right? This year, this year, Alphabet's earnings per share are likely to be pressured as well because consumers are making up for lost time spent during the pandemic at home. Now they're making up for that by going out more often, spending more money at restaurants, spending more money on travel, spending more money at bars, and all of these things are not helpful to Alphabet because Alphabet makes more money when people spend money online, right? When you click on a Google search advertisement and you buy something from there, that's where Google makes a lot of money. That's where Alphabet benefits a lot. So if you're not spending a lot on e-commerce, that's downward pressure on Alphabet's earnings. So I suspect for all of 2023, that's going to pressure Alphabet's stock undoubtedly, right? Because consumers are still making up, still unleashing pent-up demand for away from home experiences. However, I feel that starting 2024 or maybe 2025, consumers will revert to pre-pandemic trends and start spending more money online because it's just so much more convenient to shop online than it is to shop in person. And for, between 2025 and 2033, that part of the decade Alphabet will benefit and its stock price could also experience a significant boost from that trend as well. So if you're thinking about, man, I missed out on Alphabet stock over the last decade, I don't know if it's too late to buy the stock. It's not. It's not too late to buy Alphabet stock. In fact, this might be one of the best opportunities you've had to buy Alphabet stock because of this drawdown in the price. Because look at this relatively cheap valuation. Look at the chart that I have pulled up here. Alphabet stock has not been as cheap according to this valuation metric in the last year. So you're getting a good opportunity to buy Alphabet stock right now. All right, so that's all I've got for this video. As always, I truly appreciate your viewership. I hope you'll come back and see me again for another video. In fact, if you like this video, I'm going to link to 2 or 3 other videos at the end of this one that I think you will enjoy. So please go ahead and click on one of those, and I'll see you over there.